Okay, today we are moving on to unit 5. So far we have discussed on 4 units, a basic of what is finance and what is a financial management. Shortly let us discuss on what we have covered up in all the 4 units. Initially in unit 1 we have discussed on what is a basic of finance and what is a financial management. Same what is an objective of financial management? We have discussed 3 points on the objectives of financial management. What are those? How you earn money, how you utilize those money, and how you take back those money. This is what a basic of a financial management. This basic clarity we got in unit 1. Further moving on to unit 2, we have stepped into a problem-based activity where we have discussed on leverages. What is a leverage?
It is like how the borrowed money can be used effectively.
Very good. How we are utilizing the borrowed money for the growth and expansion of our business. We have discussed on that. In that we have discussed EBIT, EPS and operating financial leverages, all these things. And in third unit, further we have moved on to what we have discussed on third unit. Say we have discussed on cost of capital, weighted average cost of capital structure. We have clarity of all those things. What is the capital? How to create the structure of the capital. And in unit 4, we have discussed on working capital management. How we are managing our day-to-day business operations. And stepping on to unit 5, which is most important, we will be discussing on capital budgeting. So before understanding what is a capital budgeting, say me, what is a budget?
Planning. Like how to use or make of things.
Okay, it is a plan of how we have to do a particular thing or a task or invest in it. Okay, capital budgeting is nothing but you are making a plan or action plan or you are making a strategy to attain a specific goal or an objective, or else I'm investing in a new project. Take it as a sense that I am going to start a new business or a new venture. In this regard, I am already having a cafe. I want to expand my cafe. In this regard, I want to segregate funds for it. So I have to decide whether investing in expansion of my cafe, whether it is profitable or non-profitable. Should I invest now or shouldn't I invest now, and I have to wait for a better time. I have to make the decision. That is what termed as a capital budgeting. You are making a strategic plan for evaluating and selecting a better feasible. What is a feasible? What is feasible? Whether it is convenient, shall we do, whether it is acceptable or not acceptable. Feasible for the long-term investment projects. As I said, I am going to expand my cafe. In this sense, whether I can expand now or should I wait for it. And selecting a project that will generate a high return for the company for its long term. Any of the company, what is the main objective of an organization, say me?
In order to earn profit.
Earn profit,
have good amount of returns.
Add good amount of returns, sustainability for a long term period. This is a goal of either of the company. To satisfy these goals, it is most important to plan on your capital. You have to plan a budget for your capital. So that is what a capital budgeting concept is. That is clear for you? Yes. With this, now moving on to what is an objective of capital budgeting. Why it is most important for you people to plan on your capital. Why we are taking a much of a time on these particular things. So I have to decide to expand my cafe. Definitely I would have more customers. Then why I have to analyze or spend a time on budgeting. Why it is more important? What is an objective in the sense? The first one is that to maximize the wealth of the shareholders. As I said to you, shareholders are the investors, owners of your organization. The main motive of an organization is to satisfy your shareholders. In this regard, to satisfy your shareholders, you should have a long-run profit inside your business. So to that, you have to efficiently utilize your capital to satisfy your shareholders. If you are not efficiently utilizing your resources, that would lead to non-profitability. Clear? And next one is to evaluate profitability of investment projects. To evaluate the correct profitability, I have to generate profit. For example, I am investing rupees 5 lakh into my business. I have to take it back. At the same time, I have also to earn profit. I have invested 5 lakh. After 4 years, I am getting back the 5 lakhs. But at the same time, I have also to generate profit. That is the basic purpose. And the next one is that to select the best investment alternative. So for example, for instance, I have two plans. I have to expand my cafe is the highest budget. I have to choose which one is the better one. Blindly I can move to the smallest budget. Maybe the highest budget will have a better plan than the lowest one. So I have to make an evaluation of all the criteria and I have to decide. To choose a better alternative, it is must to make a decision on capital budgeting. And the next one is to effectively allocate financial resources. For instance, I am having a sum of rupees 10 lakh. I have to effectively allocate 2 lakh for this, 5 lakh for this. I have to effectively allocate. At the same time, I should also have savings inside me. And next one is that to support long-term growth and expansion of the firm. As I already said, either of the business, the main motive of them is to generate profit, at the same time to sustain from a long run. For that, we have effectively used the resources. If we are not effectively using the resources, then we will not be having enough of fund. If we are not having enough of fund, our business will be going into a sad reality. So this is what it is. And next, coming on to the importance. So say me, what are the importance of capital budgeting as of we have discussed? Why it is important?
It gives a thorough planning.
It gives a thorough planning.
It ensures that business is on track.
Business is not at the right.
Wastages will be reduced.
Wastages will be reduced.
And the firm will have a correct planning how to allocate resources.
Okay, a clear cut plan on how to allocate and use the resources effectively for all of this. And as we discussed, for the long-term financial planning of the organization is the first term because it satisfies the basic objective of an organization. And next one is that efficient use of resources, as I said. And next one is that financial and investment risk. We are investing in either of the opportunities, but it should not go into a risk. And next one is that improves profitability and competitiveness. We will be having competitors. We have to overcome those competition and to make a strategic decision. Strategic decision in the sense we are making a good action plan to overcome our weakness or to improve our strength. So this is what a capital budgeting. Are you people clear with this?
Yes, ma'am.
This is the basic concept. Only if you people thorough with this, we can move on to some. Is that clear? So next we will be discussing on the types. What are the types of capital budgeting and we will be moving on to some. Is this clear?
Yes.
Thank you.